Good morning, good afternoon, good day. Welcome to my weekend market recap, 25th September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They run as add-ons on the Metastock and TradeStation platforms. That was the last slide. Let's continue with the live system, starting with a look at the global market. First, the Australian index, AORD. AORD displayed the bearish headwind possible reversal signal at the very top. Since then, price could not go up. The backdrop color is remaining magenta. The memory trendline supports proved robust once again. Price tried to go below the trendline support but bounced up from there and closed above the support, and weekly also displayed the indecision at the bottom signal. In the daily, price is in a downtrend. In the last webinar, I mentioned that if price can go up and then come down again, that may give a go with flow short setup. It has gone up from the recent low, and at the recent low it again displayed the indecision at the bottom signal. From there it has gone up, tilted a little bit down on Friday. If next week the daily color changes to magenta, that may give a go with flow short trade setup. Will we take such a short setup even if price is just above the weekly trendline support? I think we can do that. If the daily turns magenta and the weekly we can see is already magenta, I think it will be safe to take a short trade in the Australian market. Currently it is continuing to be in a downtrend, the same status that we saw in the last webinar, that was Wednesday pre-market webinar. Next is Japan's Topix Index. Topix was in an uptrend and that is continuing. This week closed with a bullish shape and bullish color candle in the weekly, and Friday's candle is also bullish shape, bullish color. Friday price went up with bullish pressure and bullish pressure reversal. And remember, this up move happened well before the USA market open on Friday. So it was not influenced by Friday's USA market, which also reversed upward during the day. It went up on its own strength, and that shows Japanese market is continuing its bullish trend, same status as was in the previous webinar. Is China market status remaining same as well? Let's look at CSI 300 index. It is remaining the same. In the daily, it is continuing in a sideways range bound by trendline resistance and support. Will not take any directional trade unless it can break out of the range or unless we have a reversal setup from the edges of the sideways range. We don't have any such trade setup now. However, next week if price can go up from the trend line support at the lower edge, and you can see there is trend line support in the weekly also. Therefore, if price can go up next week, it may give buying opportunities in individual fundamentally strong stocks. CSI 300, same state as in Wednesday's webinar. FTSE index, well, no change in status, continuing to move in a sideways range. The weekly trend line support, and these trend lines work beautifully. As you might have seen if you are using the Q systems, the weekly trend line support worked beautifully once again. And India's Nifty 50, I think that status has also not changed. Surprisingly strong, I must say. It was the strongest of the global markets. It is continuing to be the strongest and made a new all-time high on Friday once again. Very strong weekly chart, very strong daily chart. There are multiple trend line supports. There will not be any shorting opportunity, easy shorting opportunity, unless these supports can be broken. Very strong indeed. That was a look at the global markets, and we see all the global markets are continuing with their trend that we saw in the Wednesday's webinar. Is that the same thing in the USA market? Let's look at that. S&P 500 ETF SPY. In the weekly, once again, the weekly trend line support worked beautifully. In the previous webinars, I mentioned on this day in the daily candle, right at the bottom of that candle, Q edge bucket analysis showed more than, not more than, almost 50%, 48-49% of S&P 1500 stocks were below lower Bollinger Band. That was extremely oversold condition. That was near the low of the day. And when it closed that day, that percentage reduced from 49% to only, you may say, only 30%. That proves once again that when you see so severely oversold condition in bucket analysis, and you can see that in real time in QH, it is time to, at minimum, book profits in short positions and also look for long trades. And I mentioned at that time in the webinars that there were plenty of fundamentally strong stocks in the USA market to buy when that oversold condition came, and we would buy using proper Q trade setup in those stocks, and I will later discuss 10 such stocks that we could trade starting from the low of the day. I didn't probably buy many stocks on this day except an airline stock, but I booked profit in many short positions, and I published that airline stock to everybody before knowing the result. And you will see later that by Friday's close, that airline stock has hit the swing trading profit target. SPY also recovered. It recovered somewhat, but it is still having, you may say, lower high, lower low. In the weekly, the backdrop color is remaining magenta, bearish. Therefore, if I see SPY turning down next week and giving us a magenta candle, bearish flow candle in daily, that will also signal a go with flow short setup, very similar to what we saw in the Australian market. SPY is somewhere in between uptrend. It's not in uptrend anymore because the uptrend was broken by this low. If we get a decline in the daily chart next week, that will confirm the downtrend with lower high, lower low. Right now, I'll not take any trade unless I see it is coming down. If it goes up, am I going to take a new trade in SPY? No, because the stop loss will be far away. Using Q guidelines, the stop loss will be below the recent low, that will be far away. However, there are plenty of fundamentally strong stocks at low price level. I have already shared many of them, and I am sure if next week the market goes up, many more fundamentally strong stocks will give buy setups. SPY recovered. I will not buy here. I will not short here right now. QQQ, it is not in a downtrend. Therefore, QQQ is stronger than SPY, did not have a lower low. It also recovered in daily after displaying the indecision at the bottom. If it comes down next week and gives a bearish flow candle, the weekly is remaining bearish in color. Therefore, if daily turns down, gives a bearish flow, that will also meet all the checklist conditions for goish flow short setup. QQQ is stronger than SPY, so I will prefer to short SPY constituents than QQQ if that happens. Right now, I'll neither buy nor short QQQ. Dia, it was already in downtrend for a while. That is continuing. It has trend line resistance in daily, no trend line support nearby, and clearly it has lower low. It recovered nicely from the point where the bucket analysis showed oversold condition, but the weekly backdrop is remaining magenta. Therefore, for Dia also, we'll get a go with flow short setup if price can come down next week. And IWM, this is the only market ETF of the 4 market ETFs that actually declined on Friday. You may see that from here, from the radar. IWM was down on Friday by minus 0.78%. All the others were up. Not maybe by very big percentage, but they were up, whereas IWM was down by a sizable percentage, minus 0.78. However, it is moving sideways, and it is right in the middle of that sideways range. So if the market goes down, I will rather short the other market ETFs or constituent of other market ETFs, not IWM. IWM is in a no trading zone, the middle of the sideways range. I will not trade IWM in either direction now. That's a look at the USA market ETFs, and I conclude that I am neither willing to buy nor willing to short any of the market ETFs based on their Friday's close. So my trading decision will be based on how the market is moving next week. Looking at the market ETFs and global markets, I don't have a preferred trading direction. However, if I look at individual stocks, there are plenty of buy setups. I'll discuss them, but let's look at the other aspects of the market to see if that influences my preferred trading direction. I have not gone through it after Friday's close, so I am going to discover along with you in this webinar. Let's look at the very useful sector industry stock advance decline from 1 month to 1 day. Just a while ago, the 1 and 2 day periods were red, more red than green, and now 1 day and 2 day periods taken together is more green than red. 5 day, 10 day, they are more green than red. 1 month, more red than green. Now, if the flip flop continues, and it is continuing for a long time, will it turn more red now or more green now? That is difficult to decide from this sector industry stock advance decline. It can go either way, especially the Friday's pie charts, they are balanced. So it can go either way. And in both ways, we will say flip-flop is continuing. I will not be surprised to see that it is starting to turn red. If not immediately on Monday, Tuesday, but soon after that, because now it is more green than red. It may go little bit more green than what we are seeing here, but soon after that, it will probably turn red again. Am I expecting market to come down on Monday? No. Why no? When I looked at the market ETFs, you saw that Friday's candles were mostly bullish, and even more than that, the weekly candles were very bullish for all the market ETFs. When the weekly candles are so bullish at the close of Friday, most often the market tends to go up in the beginning of the next week. After that, what will happen, we don't know. But when the week ends with such a bullish candle in all the market ETFs, usually, which is more than 60%, much above 60% of cases, the market continues the uptrend next week, at least in the beginning. So that is my expectation based on the weekly candle. The sector industry advance decline also says it may get more green before turning red, but it can go either way. If I look at the bucket analysis, neither the percentage of stocks at the highest bucket or the lowest buckets are anywhere close to extreme levels. Extreme levels will be 30%, 40% or so, but now the uppermost bucket is at only 10%, lowermost bucket is at only 1.6%. So it is nowhere near extreme levels. We don't have any directional bias based on that. If we look at the percentage of stocks above mid Bollinger Band for S&P 1500, that is at 45% level, slightly bearish because more stocks are below the mid Bollinger Band than above the mid Bollinger Band, and we see on Friday it didn't change from Thursday's level. Friday was very balanced in terms of sector industry stock advance decline. So if I use daily interval, I cannot decide on market's next move, but if I use the weekly interval, that is quite bullish. And let's see if that bullishness of the weekly candles is carrying forward to technical breadth. Using Q Finder, we look at technical breadth, balance between bearish and bullish signals, weekly interval, and it is bullish. 61% of all signals are bullish. Strength signals are bearish. That is because of large number of gap downs. 13.8% of S&P, no, sorry, not S&P 1500, 13.8% of liquid stocks, and I ran finder on liquid, mid and high price stocks, avoided low price stocks, which tend to be very speculative and therefore they are not in my usual trading universe. The finder is supposed to be used on your own trading universe so that you can decide in terms of technical breadth, do you have a bullish bias or bearish bias? My trading universe is liquid stocks but avoiding low price liquid stocks. So those stocks, my universe had 13.8% gap down on Monday. That's why the strength signals are very bearish. However, if you combine that with the reversal signals, almost 89% of them are bullish, and then you see the reversals in actual number is much more than the gap downs. Then we know that combining the bearish strength with bullish reversal, that is actually together bullish, and all signals together is also bullish. trend continuation is also bullish. Now this is the picture as of the week's end. But remember, well before that, we could anticipate it, and I shared it in the public webinars when we saw the reversals were turning bullish from a bearish posture. So we could anticipate a recovery from technical break, then that happened. The weekly finder picture is reflecting my view from the weekly ETF candles that it is bullish. Friday's market was mixed, balanced, that is in terms of sector industry stock advance decline, but in terms of bullish versus bearish signals, it is not balanced, it is bearish. 74% of all stocks, all signals in all liquid stocks, they are bearish. Strength signal is also bearish, 83%. Trend continuation 66% bearish, reversal 68% bearish. So across all the categories, Friday's technical signals are bearish. What does it mean? That means on Friday, you could actually look for bearish trades also. And we saw the weekly backdrop is remaining bearish in spite of the recovery. So it would not be unthinkable to consider some bearish trades on Friday. Were there many? I don't know. I didn't look for bearish trades on Friday, but we could scout for some if I have time. I'm looking at the other charts. There is no extreme level in bearish or bullish signals. So we don't have any decision to be made based on that. Friday is bearish in terms of technical breadth. The week is bullish. So the market can go either way. Let's see if from the market breadth we can have some insight that can help us with trade direction. Let's look at mega caps first. Mega cap top 20. In the recent previous webinar, when price came to the trendline support, I mentioned that the shorts taken at this point at the swing high, and at that point at the swing high, I mentioned it was time to be cautious with mega caps. Price came down, and when it came down, hit the trendline support, I said if it bounces up, we may think of buying mega caps. And that indeed happened. Now it is in the middle of the sideways range between the trend line resistance, trend line support. So I will not take any trade in mega caps now, but at the lower edge of the sideways range, once again we could start to buy mega caps. As the mega cap top 20 has gone up, I am pretty sure some of the mega caps gave a buy setup. And I shared one of them on Friday. This is mega cap top 20. It is at the middle of the sideways range, but some of the mega caps might have given low risk buy setups on Friday. I will look at one of them. Mega caps are not giving us any signal whether to be bullish or bearish because it is right in the middle of the range. Let's look at now the market internals, first using very broad composite information, looking at the whole exchanges, Nasdaq and NYSE. In last few webinars, I showed that Nasdaq, which earlier used to be weaker than NYSE, was stronger. Let's see if that is true now also by looking at percentage of stocks above 50 MA. For Nasdaq, now it is slightly below 40%, let's say 38%. And NYSE is also around the same level. So now they are at the same level in terms of percentage of stocks above 50 MA. So first Nasdaq was weaker, then Nasdaq was relatively stronger. Now they are equally placed. The 3-month new high low for the two exchanges, for Nasdaq and NYSE both, they are near the middle level, neither at the upper extreme nor at the lower extreme. So once again, it is an indecisive zone. Don't have any influence from that on our bullish bias or bearish bias. Let me change to weekly interval to see if there is any bearish divergence in up down volume or advanced decline, and there is no bearish divergence in up down volume advanced decline. So we have no influence from that also on our trading decisions. Lastly, let's look at the very useful market breadth total view that is calculated based on the two exchanges as well as the four major indices. Let's look at the percentage of stocks above 50 MA, that is at 45% level. It's in a downtrend below the midpoint of 50% level and well below the average line. So we are bearish from this angle. It did tilt down on Friday. Isn't it interesting? These market breadth insights are very valuable. They show us what is happening under the hood, and I'm looking at it for the first time along with you after Friday's market close. Friday's market was not weak. However, I see that percentage of stocks above 50 MA actually tilted down. That might also support looking for some short trades on Friday. We'll look for that. The yellow line is remaining bearish. The 3-month new high low is in the upper half but not at the higher extreme, so we don't have any signal from that. We had a distribution count of 4 on this day, and I mentioned in the webinar that we wouldn't short on that day because it was oversold. And I also mentioned that if price went up, it has gone up from there, and now if we have a decline with distribution count, let's say 3 or 4, then I will be quite inclined to start taking short trades again. I took short trades around this place in individual stocks. I booked profit in this point, and now I'll be happy to take shorts again if I see a price move down along with distribution count. And the weekly backdrop, once again, in all the market ETFs remaining bearish color, so I'll be happy to take shorts if I have distribution count with the market ETFs coming down. There is no Hindenburg, there is no Phoenix also. So I am not able to have additional input from market breadth on whether to take long trades or short trades, but with slightly bearish bias probably because the yellow line is coming down. What kind of stocks are in favor? Growth versus value, the magenta line, it was going up, so growth was doing better than value, and in last couple of days it is flattening out. So growths don't have any advantage right now. Over last couple of days, it's not coming down and not going up, it's flattening out. And small cap versus large cap, it was going up for a while and that is also flattening out. So there is no advantage between trading small caps or large caps. No insight from that as well. With that, my conclusion is I am not able to decide whether to be bullish or bearish on the market from the market level analysis. So far we just looked at the market. Now when the market came down heavily on Monday, there were many fundamentally strong stocks at low price level, and I shared several of them. Earlier I shared several bearish trades. I mentioned in Twitter I'm going to look at least 10 such stocks. So let me do that. And all of these stocks I have mentioned, okay, not all, most of them I have mentioned somewhere or other, and some may be new trading opportunities. Let's start with Tesla. In one of the master classes, and that was happening right on this day, Monday, when the market dropped severely. In that master class, that was on option trading, using Option Station Pro and Q analysis, I took an example, and the only example I took was on Tesla on a bearish day, very bearish day. In fact, I took the example of buying Tesla using short put or long call vertical. Long call vertical was preferred at that time, as I explained, because the volatility was working better for long call verticals than short put verticals. And I also mentioned that we could expect price to go to the three candles here around 755, and in fact it has gone above that. So a bullish trade decided on a very bearish day worked out beautifully, hit the profit target easily. And we could apply option analysis successfully to decide what to trade, short put or long call vertical. Now let's look at a bearish trade I shared again before knowing the result, Comcast. I shared it on this day, very bearish trade, long bearish candle. So I wouldn't like to short using stocks. The stop loss would be far away. Instead, I shorted using short call vertical. And I mentioned at that time that the biggest down move in 3 months that comes at price extreme high, that is often a sign of further weakness to come. Biggest down move in such case when it comes at pendulum high is not an exhaustion, not a bearish exhaustion. And you see the market recovered beautifully. However, this stock could not go up. The short call vertical is continuing to work very well. As time is passing by, it is increasing in profit. In the last webinar, I mentioned that I am keeping an eye on the trend line support. If it comes to the trend line support and fails to go down, then I will book profit in the trade. So this trade, a bearish trade, is also continuing to work, and again a trade that I shared before knowing the result. Now let's look at another bearish trade I shared, UAA. I shared it on this day as a go with flow as well as a breakdown trade. Partial profit could be booked near the lower boundary. And in a previous webinar, I mentioned looking at the weekly trendline support that if price came to that support, we could watch it carefully. And then right on this day, I think on this day I had the last webinar, Wednesday pre-market webinar was on this day, I mentioned that it had hit the weekly trendline support. It displayed two indecision at the bottom, and I specifically mentioned that if price can go up above the high of this Wednesday's or rather Tuesday's high, then we would book profit in the remaining position. That was again a perfect decision. Okay, my credit is just to apply the Q guideline. I didn't do something extraordinary. Using that guideline, when price came to a major support, and this trend line support is coming from far away, some of these trend lines are drawn even looking back 10 years, very useful. And then we had two indecision at the bottom, doji candles. There is a concept that at the bottom, especially in this case at trend line support, we have doji followed by an up move, that is a bullish move. So we would book profit in the remaining short position, and that analysis I shared publicly before knowing the result worked out beautifully. Now to airline stocks. Let's look at SkyWest first. I first shared SkyWest on this day as a go with flow long setup. And I mentioned in the webinars that I took the trade using short put. I first talked to one of the Q traders, I think. I was helping him set up his computer. I mentioned it was short put, and later on publicly I mentioned it was short put. Then on this day, I publicly put my forum again, posted a topic on forum that I booked my profit in the short put, and I instead took a long position in the stock. Why? Because airlines industry was looking good, that day was bullish. Short puts have limited profit potential. They are excellent to buy in fundamentally strong stocks. They give profit most of the time. If not, we could hold on to the stocks. But when I saw that Skyways along with the airlines industry was turning more bullish, I didn't want to be limited to the max possible profit of the put premium. So I booked my profit, took a profit in the short put position and bought the stock. My stop would be using Q protection signal, which would be below the recent low. I could put it below the trend line support. The stop was not hit, and by Friday's close, I think it has covered the risk distance. So I could book at least partial profit. However, the weekly is very strong, daily is strong, and I am bullish on the industry because of vaccination, because of natural resistance. I think people will start to travel more, both American people as well as international travelers. So I'm bullish on airline stocks from that angle. I'm bullish on restaurant stocks also for the same reason. So I didn't book my profit. I am holding my position in SkyWest. However, I will not let it go into loss. Can it go down? Anything can happen. If it goes down, I will not let it go into loss because it has already hit my initial profit target. Once again, first I shared the idea on this day. I reiterated my bullish view on this day again. Both of those trades have hit the profit target. Another airline stocks I shared was Hawaiian Airlines, and I first started talking about it when price was here. At that time there was a trendline resistance, and I mentioned that Q traders should buy it after the trendline resistance was broken. They could buy it at the double bottom when it gave a box long setup using the bull release signal, but I didn't identify the stock at that time. I first mentioned about it in this place, and then I took a long position, I think on this day. At the close of this day, price came down, but using intraday charts, I saw trend line was being broken, so I already took a position. I am in the opposite time zone. I took a position. My stop loss would be below the trend line support using Q protection signal. Stop was not hit. On Friday, it went up. On Thursday, it broke decisively above the trend line resistance, and Friday went up again. The weekly is looking pretty bullish, so I am continuing to hold my long position in Hawaiian Airlines as well using stock long position. Both of these are very strong fundamental stocks if you use Q scorecard. So I am not in a hurry to close these two trades. I have difficulty actually holding stocks for longer term. I'm trying to train myself to do that because I'm quite good at swing trading. But these two stocks, being bullish on the further opening up of the US travelers airlines industry, I am trying to hold them for longer term. Let's see if I can do that. But in any case, I am certain that I will book some profit in both of these trades, Hawaiian Airlines and SkyWest. Now, one of the Q traders, I don't mention their names, is an or was an executive, high level executive in ExxonMobil. And ExxonMobil gave an excellent breakout setup on Friday. This is one of my, actually Thursday. Let's look at Thursday's chart using the historical memory trend lines. I shared the trade idea. Okay, historical memory trend line, why not coming? Yes. On Thursday, it broke above this trend line resistance. Earlier, it was inside a triangle pattern in daily. Thursday, it broke above trend line resistance and it had a bullish flow one day ago. It also broke out of the trend line resistance with bullish pressure. So we had two bullish pressures in a row, Then it broke out of the resistance on the second bullish pressure day. We wouldn't buy before Thursday's close. I ran the analysis using Q systems after market close. So I identified it after market close on Thursday, and on Friday I kept an eye on the stock. It was continuing to go up, so I took a long position in ExxonMobil. As of now, ExxonMobil is fundamentally very strong. Let's look it up. And while Q Vital is calculating the scorecard, let's go back to the weekly daily. The weekly is at trendline support. Bullish backdrop, very bullish candle shape, and on top of that, I always like this reversal pattern in the weekly candle at trendline support. So price tried to go down, lured probably some short traders, proved them wrong, and sharply turned higher. That is a very bullish pattern, especially when it is happening in a trendline support, at a trendline support coming from far away. And if you look at the alternate HSI like signals, plenty of momentum signals we had on Thursday. Remember the signal there was Thursday that had PSAR reversal. Bongo turned green on Wednesday itself. Thursday Bongo was green. Thursday was the breakout, and Thursday had Mobo breakout from a squeeze with a kahuna. It also had the biggest up move in a month. So many momentum signals came on Thursday. If you tracked it on Thursday using Q signals, real-time signals, you could buy on Thursday itself. I bought it on Friday. And if you look at its fundamentals, it's a crown jewel. As I call them, undervalued stock with fantastic earnings growth, fantastic revenue growth. We can see year on year earnings growth, revenue growth sharply going up. Fundamentals are strong, and as good a technical breakout at weekly support that I could expect with a lot of momentum signals in the alternate HSI like chart. So I shared it after I found it, and I have a long position in ExxonMobil, and I used, in this case, I don't usually use call options, but in this case I used a call option, naked call, and I saw the next earnings is on 28th October. I bought a call option that is expiring after the next earnings date. Unusual. Usually I don't buy naked call options, but in this case I did because the charts are looking pretty good. Fundamentals are also very strong. Then another stock that I shared on Friday, just before the market close, was Facebook. Now Facebook has a pattern that is tradable, in fact. That is again an indecision at the bottom, doji candle. The stretch band indicator showed it was oversold below lower boundary. So oversold shown by lower boundary, shown by stretch band indicator, and then we have an indecision candle. There is a thought that after indecision at the low, if price can go above the high of that indecision candle, that's a buying opportunity at the very bottom. And it gave a bull release signal with bullish pressure, bullish U-turn. Let's look at QSonar. I found it from QSonar. Let's drop Facebook on QSonar, and it gave a box long setup. So that helped me identify the stock. How is Facebook's fundamentals? Again, it's a crown jewel. Remember, I mentioned when the market was down very much on Monday, that there were plenty of buying opportunities or plenty of stocks that are fundamentally very strong, and we may find buying opportunities there. Facebook was one of them. Undervalued stock, fantastic earnings growth, revenue growth, year on year earnings growth, revenue growth, quarterly earnings, revenue growth, both are going up. And here funds status is also very bullish. Fundamental strong at a very low price level, gave a box setup, and now let's look at the technical charts. I'll show you something. Let's look at the usual daily entry chart. In the last 3 days of the week, price came to this level and reversed. What was that level? That was a resistance area earlier, and then price broke above that, so it is expected that resistance level, this series of watermark resistance with bearish headwind incidentally at the same level, that did not lead to a price drop in this case. Some sideways move, but price didn't go up. In any case, those resistances, they are expected to turn into support now. And at that point, we again had that indecision at the bottom, bull release signal, and that was picked up by Q Sonar as a possible box long trade setup. So I took a long trade in Facebook, and just like I explained in the options trading master class, I looked at the option chain. Long call verticals were looking better than short put verticals in terms of volatility. I would prefer to use short put, however, the volatilities were not favoring that. So I took a long position in Facebook on Friday. In fact, I day traded it and I closed some long call, naked calls with profit. And at the close of the day, I am holding a long call vertical. Let's look at some more stocks. Cheesecake Factory. I love this company. I love their food. I love their cake when I was in USA. Everybody knows Cheesecake Factory. And on Thursday, it again gave a very nice breakout. Let's look at Thursday's chart using historical trend lines. It broke out of the trend line resistance, broke out of the triangle pattern with a bullish flow, with a possible goit flow long setup. Remember, in the latest version, the flow color is shown in the candle and the goit flow setup is highlighted in this band dot. Or if you are using Q Global, it will show up in the ribbon at the top. So not every bullish flow is a goit flow setup in the latest version. On Thursday, we had a bullish flow, but we also had a possible goit flow long setup plus a breakout with bullish pressure. Let's look at the daily weekly now, and we see on Thursday it had the biggest up move in 3 months, coming in a relatively low price level. These biggest up moves in 3 months at a lower price level are not signs of exhaustion. Most often they are sign of a bigger up move to come. So on Thursday we got these signals. Unfortunately for me, I identified it after the market close, so I took the trade next day on Friday. But if I could locate it on Thursday market close, I was sleeping at the time, I would be very happy to buy the stock on Thursday itself. And I'm holding a long position in Cheesecake Factory. Again, because of opening up, further opening up also, I am very bullish on this industry as a whole. The weekly chart is looking beautiful. Very nice breakout from trendline resistance in weekly, daily both, at support in weekly, daily both. And if we look at its fundamentals, okay, I think it was a crown jewel again. As I mentioned, there were plenty of fundamentally strong stocks at low price level. ExxonMobil was one of them, Facebook was one of them, and you can see Cheesecake Factory cake was and is one of them. Undervalued, fantastic earnings growth, fantastic revenue growth. So that was a crown jewel. On Friday, it went up by 5%, large gain on Friday itself. Cheesecake Factory. I have a long position with stocks. why I put A here. That is a typing error. I didn't look at a stock with symbol A. Okay, I'll not look at that. Not A, I don't remember looking at A. Let's look at one banking stock and one drugs retailer, Rite Aid, RAD. Now, I often like to, not often, but yeah, you can say often, when a strong fundamental stock sharply suddenly comes down to longer term trendline support, I'm pretty happy to buy them. Rite Aid was one of them, came down sharply suddenly to the weekly support, and the weekly support held beautifully. In the daily, it came to the double bottom, displayed an indecision at the bottom, and this indecision at the bottom is very useful. It is a Q signal, and you can see it comes not only in doji candles, it has its own calculation. So we want to decide, is there an indecision after a price drop significantly with oversold condition below lower boundary, and does price go up above the high of that candle? And that happened on Friday. Now, Rite Aid's industry was not very strong, if I remember. However, technicals were looking quite good. It's a stab stable business, drugs retailer, who doesn't need them. Let's look at its fundamentals. Rite Aid, if I don't remember the suffix, I just type the ticker symbol. It will find out the Reuters symbol first and then do the analysis. It is undervalued stock. Undervalued stock went up by 3.3% on Friday. Revenue is steady, as is expected in a business like drugs retailer. Has a short squeeze potential. As I mentioned, the industry was not necessarily strong on Friday, but based on the technical support at weekly trend line and daily watermark being oversold, undervalued stock, I took a long position in Rite Aid. I think I used long stock position. And last stock I will share, that is a banking stock, SSB. Regional banks, very bullish weekly pattern. Sharp opening down with a gap down and very sharp recovery for the week. With what I like to see, this reversal. Reversal at the low price level is always a bullish signal, and in this case it has created a very nice false downside breakout, luring short traders or forcing weak long traders to exit the trade as it went below the watermark support and then very forcefully reverse above it with a bull release signal. In the daily also we can see the false downside breakout. Bullish pressure on this day. I took a long position in SSB as well. If you look at the alternate signals, this is very useful again. Just like the reversal signal in weekly and the false downside breakout is very useful. If you see biggest up move in 3 months happening at a low price level, that is almost always, I will avoid saying almost always, that is often a sign of more bullishness to come. It's never a sign of, okay, I shouldn't say never, it's hardly ever a sign of exhaustion. Even though it is the biggest up move of 3 months, that's a sign of things to come. We also had a MOBO breakout with a kahuna on that day. One more thing to note, it did go above the expected move, but that is fine. At a low price level, it closed above the expected move on Thursday, no problem with that. if I look at the chart with historical memory trend line, it in fact broke above the trend line resistance on Thursday. So that was a breakout setup at a low price level. So I have a long position in this stock as well, SSB banking stock. And again, if you look at its fundamentals, I am reiterating there were plenty of fundamentally strong stocks at a low price level. So I was waiting to buy them. Earlier I took some short trades, I booked them, all mentioned publicly before knowing the result, and see this stock. Undervalued stock, excellent earnings growth, excellent revenue growth. Very nice breakout, and in this case industry is also very strong on Friday. So I took a long trade in SSB. I am very long in the market right now, as you can see. When you look at my publicly shared trades in the forum, on the Twitter, in these webinars, you know I am bullish or bearish, and I started being bullish at the low of the market on Monday, and I am holding mostly long positions now. Comcast is the only stock I shared publicly that is still bearish, and it is in a profit. We are near the 1 hour point. I will not look at more trades now. I shared many of the stocks with Q signals to show once again how you can do a very logical, powerful 360s analysis looking at industry, fundamental, technical, and buy stocks or short stocks at low risk points. That works very well, and Q systems are real time. That also helps. That's all in today's session. Next session for the master class attendees will be on Tuesday 11 a.m. that is on Q Elite installation, and the public next webinar will be on Wednesday pre-market 8 a.m. EST. I look forward to seeing you there. Thanks for attending this session. Keep safe and have a wonderful weekend, and as always trade profitably. Thank you.